Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 62, published on July 16th, titled Great ESG Stocks for Your Portfolio, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global, ethical and sustainable investing news, commentary, information and resources. Remember that you can find a full transcript, links to content, including stock symbols, quotes and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. Now, just a reminder, I do not evaluate any of the stocks or funds mentioned in this podcast. Furthermore, if you're concerned about the ESG and sustainability ratings of any stock or fund included in this podcast, check your broker's site for such information. If your broker doesn't have this information, sign up for free with Morningstar, and you can gain access to company and fund ESG sustainability ratings. Please note, I receive no compensation from Morningstar or anyone else covered in these podcasts. Also, if any terms are unfamiliar to you, simply Google them. I'll begin this week with Steve Bouillon's article titled 7 ESG Stocks to Add to Your Portfolio, that appeared on investorplace.com. I'll mention each company, followed by some of his remarks on that company. Incidentally, he says, for this article, I used MSCI's ESG ratings. MSCI is one of two leading ESG data providers alongside Sustainalytics. So, now to quote Mr. Bouillon. 1. Procter & Gamble. Long-standing brand strength has assisted Procter & Gamble in ascertaining a dividend payout for 64 consecutive years. MSCI cites factors such as product safety and carbon footprint as drivers behind the company's strong ESG rating. A forward dividend yield of 2.54% doesn't only mean that income prospects are bright, but it also means that the company's growth is intact. 2. Texas Instruments. Texas Instruments receives a near perfect rating from MSCI. I like the stock as a semiconductor play due to the diversity in the company's distribution lines. A growing electronics market and a rebound in the auto market should contribute immensely to its top line moving forward. A dividend yield of 2.1% is seen as high relative to the sector. I used the PE price multiple and expected EPS and calculated an intrinsic value of $226 worth on upside roughly 19%. KeyBank's recent price target of $240 per share should breathe air into the argument. 3. C.H. Robinson Worldwide. Corporate governance and behavior have caused an upgrade to a AA rating of late for this logistics and shipping company. The company has experienced 26.25% in year-over-year revenue growth and 125% growth in normalized net income year-over-year. Judging based on relative value, the stock's very attractive. C.H. Robinson recently received a $117 price target from UBS, which could mean an upside of 26%. 4. Teladoc. This healthcare stock has pulled back by over 20% over the past year after its merger with Livongo Health, followed by a class action complaint against the latter. The stock leveled out in the last month with a 3% gain, and investors are optimistic following the company's reported 150% year-over-year in revenue growth last quarter. With a price-to-book ratio of 1.54 versus its 5-year average of 6.52, I certainly see relative value at play. 5. Nvidia. Nvidia has been in a speculative space of late, but I believe that shouldn't be the case. The company is gaining market share in an expanding industry. Furthermore, Nvidia is a cash-rich company, which is being used for growth acquisitions, dividends, and share buybacks. Analysts from BMO Capital remain optimistic as they placed a $1,000 price target on the stock last week. I think the stock could reach the $1,190 handle by next year. Corporate governance, behavior, and human capital development are the predominant factors contributing to the company's AAA ESG rating. 6. Adobe. Adobe has been a popular stock among analysts over the past year. The company's ESG is driven by its data privacy policy, sound corporate governance, and favorable working conditions. Adobe has experienced solid growth through Adobe Experience and its creative and document cloud products. The stock has massively outperformed its sector median over the past 3 months. I used the PE multiple and multiplied it by the EPS to find a possible upside of 20%. If shares continue to be repurchased and diluted, EPS continue to improve. Investors could expect returns in excess of even that. 7. Microsoft. Corporate governance and exploiting opportunities in clean tech have assisted Microsoft in achieving a favorable ESG rating. I wrote about Microsoft in a previous article. Microsoft has experienced 15.34% growth in its year-over-year revenue growth in the trailing 12 months. In addition, Microsoft's return on equity of 44.99% is more than 6 times the sector average. End quotes. The next article relates to the potential for successful returns in the booming alternative energy and electric vehicle industry, though it appears mistitled with the title Best Renewable Energy Stocks to Buy This Week? 4 to watch. It's by Josh Dillon, which I saw on Nasdaq.com. Here's some of what Mr. Dillon has to say. Quote, the federal focus on EV adoption would highlight companies such as Blink Charging and Volta Charging. He continues, here are 4 companies making headlines in the stock market now. 1. ChargePoint Holdings, Inc. ChargePoint is an EV infrastructure company that is based in Campbell, California. The company operates one of the largest online networks of independently owned EV charging stations. It has a strong leadership position in North America and a growing presence in Europe. The company has an established capital-light business model with growth that is proportional to a rapidly growing EV market. ChargePoint Holdings Inc. stock is up by over 170% in the last year. 2. Li Auto Inc. Li Auto is an electric vehicle manufacturer that is headquartered in Beijing. The company designs, develops, manufactures, and sells premium smart EVs. In essence, it is a pioneer to successfully commercialize extended-range electric vehicles in China. Li's stock is up by over 85% in the last year. 3. FuelCell Energy Inc. is a renewable energy company that focuses on fuel cell technology. It delivers efficient and clean solutions for the supply, recovery, and storage of energy. It also develops and maintains megawatt-scale fuel cell systems for utilities, industrial, and large municipal power users. FuelCell Energy Inc. stock has seen impressive gains over 150% in the past year. 4. Ford Inc. Another upcoming name in the renewable space now would be Ford Inc. Sure, most would not immediately think of this legacy automobile industry giant when discussing renewable energy. However, like most of its peers, the company is pivoting hard towards the EV industry amidst global green initiatives. The company is currently planning to invest over $30 billion towards its EV divisions through 2025. Ideally, Ford hopes to electrify its entire portfolio by the end of the decade. The company's shares have skyrocketed by over 220% since its pandemic-era low. End quotes. Now here's an article with an intriguing title. Is this the hottest ESG stock of 2021? It's by Nicholas Perry and on the oilprice.com site. Here are some quotes from the article. This company is Facedrive. Facedrive calls itself a multifaceted, people and planet-first tech ecosystem offering socially responsible services to local communities with a strong commitment to doing business fairly, equitably, and sustainably. Facedrive Foods helps connect people with their favorite restaurants and food stores in their area and provides them with great green deals. Facedrive Health strives to develop and offer innovative technological solutions to the most acute health challenges, including its proprietary TraceScan wearable technology for contact tracing. Facedrive Marketplace offers curated merchandise created from sustainably sourced materials. We think the company's recent growth strides could put Facedrive in a position to be one of the most attractive tech stocks in all of North America for 2021. End quotes. Now, Mr. Perry also has the following Canadian stock suggestions. Quote, 1. Shopify Inc. is playing a pivotal role in the e-commerce boom. Not only does it help anyone and everyone who wants to have a try at launching their own business, it gives them the tools and resources to do so. Shopify is pushing towards sustainability in a major way. 2. Polaris Infrastructure is a Toronto-based renewable energy giant with a global footprint. 3. Telus Corporation. Long-standing commitment to putting its customers first fuels every aspect of its business. In fact, Telus Health is one of the country's biggest healthcare IT providers, and it's done so with sustainability in focus. Telus also has 4 consecutive years on the Dow Jones Sustainability World Index. 4. Shaw Communications Inc. is one of Canada's leading telecom infrastructure and cloud service providers. And that's not necessarily a bad thing when you consider Shaw's sustainability goals. In fact, it is one of the biggest customers of Bullfrog Power, which sources its electricity from a blend of wind energy and hydropower. 5. Magna International is a great way to gain exposure to the wider alternative energy boom, and by extension ESG. Market without betting big on one of the new hot automaker stocks tearing up Robinhood right now." End quotes. So now for some honorable mentions. 1. Top solar energy stocks to watch right now? 3 for your list. By Brett David. Quote, "Best solar energy stocks to watch now: Dayco New Energy Corporation, Enphase Energy Inc., and Canadian Solar Inc." End quote. Of course, this is my comment, Dayco is highly controversial. There's much written about it in the media. 2. These 3 renewable energy stocks are too cheap to ignore, by Travis Hoyam, who recommends First Solar, Howard Smith likes Proterra, and Daniel Fulber, who picks Vestas Wind Systems. Well, these are my top news stories with their stock and fund tips for this podcast. Great ESG stocks for your portfolio. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcast and scroll down to this episode. Also, be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better post-COVID world through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and conscious about the ethical and sustainable values of your investments. Thank you for listening. Talk to you next on July 30th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.